I didn't hear any sound. All right, this is Doc from North America. Good morning, good afternoon, and good evening. What did I just say before this? Oh, great. Yes. And so, no WhatsApp yet. We have a new phone coming in. Somewhere's like Thursday. So we're hoping that by Thursday we will have WhatsApp back running, and we'll be able to talk to Janos and everybody at Dukascopy and so forth. But we're just still running since we lost the other phone, which I'm not giving up on. But new phone is coming in, and we'll put the money out, and that's just the way it goes. And we buy unlocked phones, so that we don't have to deal with that. Let me check the sound here. Oh, let's get the chat line up too. Oh, Magoo, you've done it again. Oh, Magoo. Let's see, where's the mouse? There it is. Let's get the chat line up so we can see that. There it is right there. Good. At least we had that up there. And there we go. Woo! Let's cut that sound. And so yes, I see the chat line. I don't see anybody on there at the moment. What else? Robin's having technical difficulties today too. There's Robin. Hello, Robin. Okay, you're back up. That's good. Excellent. I just got going again. I broke a HDML. And I broke the port itself. I was moving the computer, trying to shift the computers around, and the next thing I know, I was like, oh no. Let's see now. Let's check the sound. There it is. Oh, there we go. All right, so we're limping along there. I did send over to the Facebook Messenger for you the thing there, and I'll hunt down the others. Probably during the webinar, I'll be able to look it up. It's not that hard. It's in your chat there. The man, hi, hey, from Bangladesh, the composite man. Hey, I like that. How you doing? I think we've seen you up here before. It's nice to see you. What are we looking at here this morning? Bangladesh, neat, far out. What else can we say about all this at this point in time? What it really comes down to is the. I got a blue line there. Is it? Yeah, it looks all right. I don't know why it's a blue line, but I'll take it. I like it. What else can we say about all this? I guess what it comes down to is, what's tomorrow? Tomorrow's this debate situation. That has the market on edge, just like before with Mr. Biden, before they had the coup d'etat, Mr. Biden out of his run for president. And so now we have Kamala Harris. She's going to talk, and that's going to be another adventure. And so we'll be hearing that one next. And so that's tomorrow evening, and I guess that'll help out the markets a little bit more, feel more comfortable about the economy, I guess the economics and the policy. I mean, that's really what it comes down to. Ooh, okay. So at this point, what do we got going on here? We've got, I guess we could drift over to like the individual currencies. Do I have anything else to say? Since I've been doing tech for the last 45 minutes, my brain seems to be pushed off a little bit. Oh, okay. Now I know where I was at. The Chinese situation again. We're seeing issues in the China market. And we're seeing, what was it? The numbers are not coming out. We know, we've been warning about that for a long time here, but that's really the real problem at this point in time, and that is that the second, what they call the second largest economy in the world, to me it's European Union, but when it comes to the, and then I always think of it as the Commonwealth as the third. And then I look at China as number 4. But in the media here in the United States, because they're very pro-socialism and they like socialism and somewhat communism, and they don't really like capitalism, they don't really look at it that way. They are cheering on China every day. And so they're a little disappointed that they're not seeing China bail out the world. In other words, they don't understand why it won't. And obviously it's as clear as the nose on my face. If there was a socialist nation or a communist nation that had that ability, they would have done it a long time ago. And the CCCP the Soviet Union would still be here, and that economic system just doesn't work. But the media here in the United States really thinks it does, and it's just a matter of time before it finally does work. And so that really confuses them all the time, and so they're a little disappointed that China is not bailing out the world right now, and instead America is bailing China out, even with our economic issues going on. Mrs. Yellen had a team of economists and so forth from China and ministers, looking for support, and they don't like to report that. They're not really happy to have to say that, so they just kind of pretend that it didn't happen over the last 2 weeks. And they still don't, they look at it and they say, well, the second largest economy is not bailing us out right now. It's never going to bail us out. And they just don't, unfortunately, that's just the way it is economically. It becomes, when in the United States with the First Amendment, you can say anything, anytime. And that's really the, that's the confusion by the world. They think if it's said, it's true. And or not, they'll sue you. Well, in America, you can't sue over First Amendment situations unless it's something like actually shown to be a false, total false, and you can't get that to be justified, because they say it's economics and they drift from it. Anyway, the end result is that that's what we're going through here in the States, and they just cannot fathom why China can't bail us out. All right, let's jump over to the euro, and we notice that we can't even show you the Chinese yuan because it's fixed to the dollar. So in other words, if the yuan goes up, the dollar goes up. If the yuan goes down, the dollar goes down. It's like, so we're not really seeing an independent currency. So the only thing we can do, let's see, we can do it this way. Let's just show you Shanghai right now. We're not going to do it through our old beta, but we're just going to go show you what Shanghai is doing through an independent source. And there it is right there. And you can see it's looks like it's down again last night, 29 points, which is about 1% drop. Nothing super duper major. You can see here's the daily chart. Just it's sliding. And it's over 52% off its all-time high. 52%, not 5%. Whereas a lot of products on the indices side, when you're looking at them across the planet, they're like the DAX, the FTSE, the Dow Jones, the S&P. They're all 2, 3, 4% off their all-time highs, 2 or 3%, not 50%. And we have that with like some of the companies left over from the collateralized debt obligation collapse back in 2009, going into the later part of 2008. It's like trying to describe options. Options were created in the middle of the summer, at the end of the summer in 1975. So it's like, well, it's not all of 75, half of 75. In this case here, it's a quarter of 2008. Just as Mr. Obama was winning the election, that finally collapsed and fell apart and bankrupted a lot of companies here in the States, like Merrill Lynch, Bear Stearns, Lehman Brothers. Was it I'm trying to think of the second largest bank in the United States? What was it? Wachovia. They went under, and they now merged into Wells Fargo as a subsidiary. Merrill Lynch is merged into Bank of America as a subsidiary. They're gone. They don't exist except for in a name of a subdivision of a major company. Same thing with Bear Stearns, and got merged into J.P. Morgan Chase. Citibank was so bad, it was like the way Deutsche Bank is. No one was willing to even touch these things. They had so many problems that the central banks themselves, like the German Federal Republic Central Bank, owns basically Deutsche Bank, and Citibank is basically owned by the Federal Reserve. And this way, they're all, they're in they're in worse shape than the Shanghai. The Shanghai is only down 50 some odd percent from its all time, whereas Citibank is like 88 or 91%. I think it's like 91% off its all time high, even to this day. And same thing with Deutsche Bank is about 14%, or I guess it's 80, 86, 87%. I think it's like 85% off its all-time high. So, and there's like Santander, and a lot of them are like that. You can see Barclays like that. You can see what's the last one, and I'll move on to the currencies. Last one is Lloyd's of London, owned by the Exchequer. It was in such bad shape that no one could even be willing to merge with it. So it's off about 82% off its all-time high. It's probably the most thriving of the businesses that took a hit back then too. In other words, it's still it's still an exchange on some level for the insurance companies. It's just that it's not making the money it used to make because it's not an insurer anymore, since they blew up. They lost that side of it. And as you can see here, when we go to all times with the Chinese market, you can see the all-time high is up around the what is that? That's the where is it at? Right there. I thought it was 6,000. Close of 5,000. High of 6. I thought it was 6,000 something. Close of 6,124. And you can see the product is trading at 2,700. So it's over 50%. You're talking about 56, 57%. And I guess if they weren't fixed to the dollar, then it would probably be off just like the ones that we talked about. In other words, China is pretty much bankrupt. It's has its financial problems like Japan did. And just after they got done unwinding the $20 trillion swap, then the Chinese finance side came over to the United States and talked to Mrs. Yellen about what can they do to help them. They have about $1 trillion in U.S. bonds, and they can't afford to sell that $1 trillion because if they lose that cash, then they have nothing to negotiate with. So that's where we're at. Anyway, that is the world in what we see. Now, does it stop us from trying to participate in it every day or financially deal with the markets every day? No. But it's always well worth knowing how much of a haircut, that's what we call it in the financial industry, how much of a haircut is going on in the financial world. It's always well worth understanding. So, in other words, I'll finish it off with this part. Was it the Bank of Scotland? I guess about 7-8 months ago, maybe 9 months ago now, the Exchequer sold something like 7.5% of Bank of Scotland, and people were stunned. They were like, "Wait a minute, how come the Exchequer has 7-8% of Bank of Scotland?" And then someone said, "Well, they have a large position." And it's just the same way, just like Lloyd's of London, Merrill Lynch, all those companies we mentioned. Our Bank of Scotland went under also, so did Barclays. Barclays went under, and the same issue. I think when you look at the all-time high of Barclays Bank, let's see if we can get that up on there, you'll see the same situation. It's a tough situation. A lot of major companies went under, and they still exist in name, and so it really confuses people because they're like, wait a minute, what's this all about? Why is it doing that? Now there's Barclays trading at like $11 a share, and then when we go to the all-time high, see if we can do it that easy. I guess we have to do a 6 monther. There's 6 months. And then we go to a year, and then we go to 1 year, then we go to 5 years, and then we go to all-time high. There we go. Same situation. The all-time high is basically around $60. Let's see if we can get the exact number of the all-time high. It's like 56.70 there. So talking about $56 a share, and it's off 78%. I guess that's about a way of looking at it. Same situation. And Bank of Scotland, the same situation. They all went under. They used the collateralized debt obligation market and over-leveraged themselves and put themselves out of business. But, our central banks protected. What's this? Inactive tabs get new look. See when tabs are inactive. At a glance, you can... Got it. All right, let's just go like that. There we go. So that is the kind of the explanation this morning. And we got into this conversation because of China. China is having major problems in every which way, just like a lot of the countries that have have economics the way they use economics. So, we're seeing this, and I know it's you won't hear it on the TV. You won't hear it because they hide it. They don't want to talk about the problems. They want to only talk about short-term opinion type of thing. They're hiding the news because then there would be a political conversation, and then they don't want to hear the political conversation. So it's what the free speech looks like here in the States. It's always a little goofy and crazy, a little goofy and crazy. All right, so from there, let's what are we gonna do? Let's jump back to where we jump back to. Let's go like that. We'll jump back to the currencies. And if anybody has a question of what I've been talking about, or just have a question about any product in particular, be my guest. Chime in on the chat line, and we'll look at it. So, the composite man from Bangladesh to the show, and we know we've seen you before. I think that's I think we've seen the composite man. I love that name. I think that's great. All right, let's get from there. Let's get that. Whoop, what did I just do, and how did I do that? I don't think I wanted to do that. No. I think I just pulled something. I did. There we go. We'll go like that. That's better. Let's see. It's going to show up on the screen. It's a little delayed. We'll take a look and see. There we go. Just moved it back over again. All right. Now, just move it a little bit more over. There it is right there. There we are. That looks better. Because I don't see the full spreadsheet on there. So I guess if I go like this with it, move that over like so, then I can move the spreadsheet over like so. I guess that's it. I guess I have to move this over maybe? Maybe I have to move this over. Ah, there you go. Okay, that's better. There we are. And we're going like that again. Now I'll move this back over to its rightful spot on the spreadsheet. You can see that. And then we can expand this, like so. That makes it better, doesn't it? And if I bring it down, it makes that better. And let's go over to here. And there is the euro. You can see that right there. You can see how the euro, let's see if we can expand that on the screen so it looks a little bit better for all. Like that. There we are. And then you'll be able to see what I'm doing right now. There we go. It's starting to pop up on the screen. So there's the euro. You can see we're pushing into the daily sell today, right here. And for those that are relatively new to the webinar, that's the signal right there. It's telling us it's breaking the zero line right here. The green and the histogram are underneath the zero. They work together. They're just different ratios. And then this is the weekly. You see the fast is breaking down today. Still in that weekly buy. Let's contract that a little bit. It's been in a weekly buy all the way back into this area in here. That's why the line is right there at the end of the week. Or in this case, it was right there. They went into the weekly buy. And when it's not on the bar, it shows you exactly what day it went in there. And you can see, it came down, tested it, and climbed back up again. And every time you get a daily buy and a weekly buy, obviously you want to be long. And vice versa. If we're in a weekly sell and you get a daily sell, you can see the product has a natural tendency to reward you 86% of the time out of 100. So And that's the way this works. And you can see the euro a little weak today, but again, the weekly doesn't look the worst, but it is dipping down below the manifold here, as you can see. So they're having some pressure there. If that green line gets underneath it, like it did here, can you see that right there? Yeah, you can. You see it. It'll be some more pressure, and the product will find ways to go down. Now, the fact that this is trying to climb into the daily sell as we speak says that there's a, I'm not sure if it's, let's see this. You know what they're probably doing, and that is that interest rates are obviously going down, and that's been in the market. I think markets have been anticipating that so long now. Now it's getting confirmed. They feel confirmed that the interest rates are coming down. So that'll make the buying the dollar a kind of a weak thing, but maybe what's happening is that the interest rates in Europe are going to stay the same. And that's maybe what's going on here, why the weekly's looking a little weak. We'll give it time because, you know, it'll show its true colors over the next, couple days. You know, by the end of the week, if they push it into a sell, something else is going on. Maybe there's just some profit taking going on. And as you can see, the stock market has turned around. Let's show you what's going on in the stock market there. There's the stock market, you know, and this is the S&P 500. Let's just give you a broader view. You can see this is from Friday. Is that Friday? No, that's Friday. This is where they settled it on Friday, right there. And you can see it's been climbing for since last night all the way to about 2 hours ago or an hour and a half ago. They corrected a little bit here. You can see our algorithm is back into the buy right here, but it hasn't gone up yet. Give it some time. Remember, we're only 36 minutes away from the New York Open, or the U.S. Open, I guess you could say. And when that happens, that will, put life into what's going on again. You know, that'll be the excitement of what's going on. So, let's see if I do this. Oh, there it is. That's why it moved. So it should be blue all the time. There we go. And so that's what we're seeing here is that they're buying some U.S. stocks and they're pushing down the currencies a little bit. Maybe they're buying dollars and selling euros to buy stock. I don't know. You know, I mean, remember, if you don't do that, you end up becoming, you're long dollars in a sense. So let's see. Am I right about that? If you buy stock, you're long dollars in dollars. And if you don't buy dollars, then you're short dollars. And maybe they don't want to be short dollars. And that's why we're seeing the strength in the currency there. From there, we'll go over to cable. And there is the cable. You are the cable. We are the cable. There's the cable. And you see that doing the same thing. We're seeing that same weakness right there. Matter of fact, we might as well just grab this guy right there and put it right there now. And you can see here it's been in the weekly buy since this action here. And we had a nice little pop up and we were in the weekly buy from back here. So you knew not to be short. You just weren't long. And then when it jumped across right there, when it jumped across there, you can be long. And sure enough, it was your classic 86% accurate. And it did it again. It's almost like a 4-to-1, 5-to-1. It's almost like 5-to-1. It's close to it. A little under 5-to-1. Or 9 out of 10, 8.6 out of 10, however you want to look at it. I guess you could round up, you could round down, you could say 8 out of 10 if you want, and that type of thing. All right, from there, we go over to see the inflation fighters. And that is, there it is right there, Swiss. They're selling the Swiss a little bit. When this is a dollar Swiss pairs trade, not a Swiss dollars pair trade. So that means that when the Swiss is heading down, it gains against the dollar. And so you can see that strength that's kicking out there now. You can see the daily is trying to turn up. That little green line has broken through the zero line right here. Right there. In the weekly signal, you can see the fast algorithm, that's that blue line right there, is trying to get up through the zero line as we speak. Matter of fact, you can see the little box there to the right. It's actually plus 0.ZZZ37. Yeah, 00037. Just the hair of its chinny chin. And whereas the slow, which we normally recommend to pay attention to on a investment way, solely because it's slower and it's a little bit more, won't wash you all over the place. And the only time we use the blue line is if you're using binaries or options. It's this way you don't get stopped out, and that's usually the way it rolls around here. All right, and then from there, we shoot over to the yen. Now the yen, we saw a strange headline last week. As Goldman Sachs was apologizing for copper markets. It also was was saying something strange, like it's threatening to take out the 161. It's trading at 143. I don't even know what they were talking about on that one. That one has me confused. And as you can see, it fell into the sell. Let's grab that red line there, right there. And so it's been pressing down and trying to take out this low, which it has failed to do. But it's not taking out this high, which it failed to do right there. So we're happy to see it just kind of chug along sideways. The high now is a 40-some-odd year high of 161. And we're real happy not to have to see that, because that means that there's inflation hitting hard in Japan, and that's really the most important thing of all, is that the situation itself is very, very, very let's put it this way. Japan seems to be, now that they've unwound the $20 trillion swap that they had on, things are starting to smooth out. The currency got cheaper and things are working out better. And at the same time, you can see the weekly has stayed in a weekly for a bunch of weeks, and you can see it on the spreadsheet. Let's go over to that spreadsheet. And you can see it right, where's it at? Go like that. There it is right there. There's the yen. We're looking at 8 full weeks now in a weekly sell and 3 days in a daily sell. Now we are on a 4th day, but look at it. It's trying to perk its head up. It's just on that edge. And let's see, what is that? I guess if I move that over, does that? You can't see that either way, can you? I guess you can't. So I guess what I have to do is do this. Move this over like that. I guess what we'll do is we'll shrink it like this so you can see the edge. And then move it over one more time. There it is. It's better. Like that. So you can see there, it's at minus 18 still. Right there. Just minus 18. So it's not, it's not in the plus yet. But it is in some type of plus. Let's put it that way. It's trying to get going. Let's put it that way. It's trying to get up. It's moving up and acting a little bit weaker, I guess you could say, but nothing too damaging at the moment. As long as it stays like this, it's really good as far as I'm concerned. And let's see where we're at this point. Let's drift over to. Oh yes, let's see what they're doing to the Great Experiment, which seems to be a major loss at the same time. Let's find out what they're doing with the Turkish lira. Now President Erdogan wants to have a Muslim war, I think he's talking about. He wants a Muslim war. Oh, something of that nature he was talking about. And there it is right there. We saw it take out that all-time high here. We get those weird spikes out of this thing every so often. I mean, it's so thin a market. Volatility's in the 400 to 500 area. What a volatility number. You see the VIX in the United States trading at like 20 or something like that. Let's see if we can spot that. Here's the VIX. This is what the currency and the stock market look like here in the States. In the basically 21.17. Nothing major. I mean, it's high, but not super high. It's just high. And then you go back to the Turkish lira, and can I even get that on the screen anymore? Let's see if we can find somewhere what the volatility. I think it's like everything else in Turkey. TRY. Let's do it this way. Let's see what the Euro TRY volatility is. Last I looked, it was in the 450 area. Volatility. There we are. Now they're saying here, track all currencies changes with our live Forex. And they're saying basically it's in the 30 percentile area. It's a little hard to believe, but I guess it's come down from the 400 or 500. But I know the options trade in a 450 area, so I'm a little confused by that. Powerful platform, Forex, yeah, Okay, let's see. Euro volatility calculator analysis, market milk. Huh. Interesting. I'm looking at the volatilities overall. Volatility per hour. Yeah, it swings pretty wild. You know, it can be 5% in an hour. It can be 25%. I mean, it goes up and down like that. That's not even days. It's just like hours. Volatility. Let me see if I can show you this. There we go. We go right there. There it is. And there was a time where I saw it. Let's see. I saw it. Let's see what this is. 12 months. Over now, can you imagine that? It can be at 5%, it can be at 10%, then drifts up to 20 some odd percent, and then drifts back down to say 9%, all in one day. Whereas, you know, if we ever even see something like that in other products, people get freaked out. Here's a month over the month. Let's see, volatility per month. I guess they're taking an average of it. Wonder if we can get back when it was. See how far back it'll go. 10 years. 12%. Now I saw options trading in the 4 and 500 area, so I don't, you know, I'm not sure what they're doing. Well, you can see the wildness of the currency. There, you know, in January it's at 6%. Overall, I guess. All I know is the options are in the 4 and 500 area, because I would love to have a spread on it. Problem is that 4 500 makes it, you know, basically like 36 to 41 type of thing, or 35 to 40. You know, it's a hard product to buy. Put an option spread on. You're looking for incredible moves, and you can see most of the time the thing only moves in a 200 or 300 point range every day. So you know it's, and matter of fact, in here lately, it's really been calm. It's only been like an 80-90 point range. So the volatility has been drifting down, but you know, it has these breakouts where it takes off 200 or 300 points out of nowhere after a couple days. The problem is that a 500 point, they really overpriced the options. So, and I haven't looked at the options in over 2 years, because when they're that overpriced, I'm not going to get near them. All right, so from there, that's the Euro Turkish lira hanging. You know, look at it. The fast is breaking down. That's pretty cool. Maybe with this thing, you know, every time we cross our fingers and hope this thing won't do something really, really bad on the Turkish people, it does. So, you know, we try not to cheer too much for it in a good way, because it doesn't want to listen to us. Like, we would like to see it go back to, you know, 9 or 10, not 38. You know, make it go to 8, not 38. And that doesn't seem to be happening. So, let's put this up on there again. Right, where's that mouse at? Right there. So at this point, you know, it's slowly receding, and then every so often it has these wild breakouts. What it comes down to is that the market economy itself there has stalled. It's gotten quiet. We've had people tell us on the ground there that what happens is that they don't set prices anymore. You know, if they're at a market or something like that, and you have to deal with the price when you go to pay. You don't know what the price is until you get there, you know, to pay for it. And that's how bad the volatility is. So, I guess it's helping the currency in some ways because no one's using it. I guess that's what it comes down to. And I could see why the president wants to have a Muslim war, because who would want to deal with an economy like that? You'd rather have a war instead. I mean, that's usually the way dictators work. They always try to have a war. It makes it a lot easier than having to answer why the economy is doing what it does. Let's save that to trading. I don't like that. There we go. Done. There we go. All right, now from there, let's go over to the South African Rand and see what they're doing with the metals market. There's the metals market right there. And you can see it's kind of flat. It's been for 3 weeks now. You can see it from back in here. They stalled out. Lifts up, goes down. Goes up, goes down. But it stays in this like envelope right here. Let's do this. How long will that envelope last? Looks like it's going to last for a while, really. It does look like it wants to last for a while. There we are. We would be very happy to see it go down. That would be very positive for the people in South Africa. So I see U.S. Treasury yields are rising today. Let's do this. Let's go over to, let's take a look at that real quick, and then we'll go back and look at the metals complex. But let's take a look at the 30-year bond. And I guess at this point we're looking at the December bond. This is the September bond. Let's see if we can see what's going on here. Let's see. Where's the bid and offer? There's last is 125.22. Yeah, this is the December. No, that's the opening. Last is 125.17. Yeah, that makes sense. So this is the September bond, and you can see the strength in that right now. You can see when the price goes up, the interest rate goes down. You can see it went into a weekly sell last week, and it's trying to climb back into the buy. So it's been, interest rates have been dropping here in the States, and when we look at the fundamentals of currencies, interest rates and inflation are a deciding factor. Yes, they are. All right, and then from there, let's take a look at, let's see, let's take a peek. There we go. At gold. Let's go over to the gold. With the South African Rand going sideways, notice the same thing is going on with the gold. It's got that same strange box in it. It seems to be trapped. Same time period. They're just like, let's make that yellow too. There it is right there. So it's trapped also the same way the South African Rand is down at the bottom. Doing the same thing, sideways. And so today, gold, let's find gold again. Gold is in a sell. It looked like it was trying to get into the buy on Friday. Seems to have failed at it. There's today. And you can see the weekly, the fast closed in a weekly sell last week. So there's definitely some pressure building on this thing. Now we'll see if the longer term algorithm compared to the blue shorter term algorithm joins in. A lot of times, it does. It gets into a buy and starts to take off, and you can see the speed of it taking off. So we'll see if gold does that at the same time. And then let's see. Let's do this. Go like that, and let's save the gold. There it is, right there. You can see it's very close to climbing into a daily buy. Very close right there at 0.47. And then we'll go over to silver. Silver, same situation, trying to lift up. Fast closed in the weekly, but the slow is still in the buy, so we're going on a fourth week. You can see it on the spreadsheets. Let's try that one more time. Oop, not that. Not that. So we just go like that. There we are. And then go like that. There we are. You can see there, gold in the daily sell. It shouldn't be 4 though. It should be. We should fix that. It is 1, 2, 3, 4, 5, 6, 7. Yeah, we thought it had gone into a buy on Friday, but it did not. It did not. And let me just fix that as we speak, so I don't have to think about it again. There it is. Open. There we are. I just want to fix that. And what is that? 7 days. 1, 2, 3. 1, 2, 3. 7. This will be the 8th day if it doesn't go into a buy. Let's fix that. 7 DS. There we are. And silver, same way. Let's see. So, yeah. Okay. Good. Same way with silver. Copper's trying to climb into the buy today, which is interesting. Let me just get that up there too. There we are. Tomorrow's the 10th. How about that, huh? 10. Let's save that. And go like that. And here's copper. Let's show you the copper. That action. There it is right there. There you can see it's actually through the box at 0.0024. There's a lot of, that's a, there's been, I guess, an opinion by some of the brokerage houses that there's a copper rally coming around the corner. And like I said, Goldman Sachs was actually saying, we're sorry, we thought the rally had already started. Then they went down and challenged the, what was it, the $4 area again, and here we are lifting back up at 413. That's what they're looking for there. So, and then last but not least, platinum. Platinum's in a buy for a second day. Fell into the weekly sell last week and is now trying to climb right back into the buy again. That usually is a good indicator of gold and silver. Usually they start to climb, but you see it's in a weekly buy anyway, just like gold is. So all we need is the daily to join in, and maybe we'll get a little pop back up in here to the 29.5 area or something of that nature. And for gold, probably pop back up to all-time highs, which is just around the corner. It's only $20 or $30 off. I mean, out of a $2,500 product, $20 or $30 is just background noise at this point. It's nothing. All right, and then from there we go over to the energy sector. There's crude oil, West Texas Intermediate. You can see it's trading in the 67.89 area. And let's see, let's put this over here. Let's see what Brent is doing this morning. There's the Brent. $71.43. And there you can see it too now, right there. 71.43. The action in the energy sector. There was talk this week. Or I guess you could say is last week. There was talk last week that the oils were looking at a hard landing versus a soft landing. And that's really what we're talking about here, and that is that economics. They're concerned that a hard recession versus a soft recession, and I would assume, with the way the politics works around here in this country, that the Federal Reserve won't allow that. And I don't think they're going to give us a 0.5% increase. I think if they did that, they would be confirming that it's a hard landing, and they don't want to do that. So they should be cutting quarter, 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 quarter like that. And that's probably what we'll see, quarter, and then the following month, then his speech will be, if the numbers look the same as they are now, we will be doing another quarter point cut. It'll go on and on and on like that. So that's, I think that they would scare a lot of investment bankers if they did the opposite. In other words, if they did a half a point, they would say, "Uh-oh, we're in trouble," and then we should be more conservative and do less. Let's see where the stock market is as we speak. See, the stock market's just quiet right near its today's highs, and it's a 50 some odd point move up, looking good. So from its lows, it was down in the 397 area, 5,397 area. I think it's 97. Let's see what it was. No, 94. Right there, 94. So with a 5,394, and we're trading at 5,455. So we're up from its lows almost 60 points. It's a pretty good move for a day. Very good move. It's a very dramatic move. And that's probably why we see the VIX right here. Where's the VIX at? There it is right there. There's the VIX. That's why we see the VIX trying to move down a little bit. It closed in a sell on Friday. And even with it up, it went into a daily sell. But it closed in a weekly buy. And that caught my eye. And I thought, oh, this is not good. So I guess volatility is going to... okay. Let's see. Interesting. Good. So, what we're really looking at here is we're looking at a volatility that is getting concerned because of all the noise of what's going on. Soft landing, hard landing, lower rates, increased rates. Is the economy, is inflation slowing? Which it is. Inflation is slowing. It's not going down, but it's slowing. It's still increasing, just at a much lower pace. And so these things have profound effects on the whole way we look at the markets and how money managers invest money. All right, from there, let's take a look at heating oil. We've been looking at heating oil lately because, it's a product we follow for a client, and at the same time, it is a major factor. It feeds the airplanes in the skies. That's what they run on, heating oil. They heat up those engines, and it is also it feeds diesel trucks, moving product around the country, and at the same time, it is used for household heating. Because it's a very cheap way of burning something. So lots of boilers run on it instead of coal or what's the other one? Coal or gas. Gas seems to have gone up a little bit more than what people want. These are utilities in this country, so heating oil is not governed by the utility situation. So boy, when it gets cheap, it gets cheap. So you have here, it's at $2.13, and then we go to natural gas right there, and it's at $2.21 a cubic foot, so it's a little bit more expensive. And we're hoping to see the diesel oil get down even cheaper, and that'll reduce cost of goods. When Mr. Trump was in office, heating oil was at 77 cents and 80 cents and $1, that type of thing around there. Here with Mr. Biden, with Biden economics, it's been up as high as 330, 340, 350, and it's gone up 5 times its value compared to under Mr. Trump. When you look at 5 times 7 is 350. So, it was at 70 some odd cents. Now, it was trading as high as $3.50. Now we've drifted down slow and steadily. You can see right there, $3 mark is even on the screen as we speak. Let's just move it over a little bit like that. You can see there. Oh, that was back in June. It was up in the $3 area. So, what's that? 5 months ago? 4 months ago? July, August, September. 3 months ago. It's had a big drop. This is belief that Mr. Trump is getting back into office. That's what they've been saying. Is that that's why the energies, because he's going to be, producing a lot of energy. The world, the United States will become be the swing producer. We're at 13 million barrels left office, or 12,000, something like that. And they've still climbed a little bit under Mr. Biden, but he'll have it up to 15, 16, even 17 million barrels a day. He'll crank it up. And when you have that, then you have lower prices. And if the trucks can bring product to a place cheaper, well, think about it. $3 a gallon, or 4 liters, basically. And now it's $2 4 liters. It's a 50% cut, basically. So that's not bad. A little bit high. It's like a 33% cut, which means the cost of delivering product is cheaper. All right, from there, where do we go from there? We've seen natural gas. We've seen that. We've seen Brent, North Sea. We've seen heating oil. And again, without a WhatsApp, we have to come up with a title. So we're going to call today's title let's see, China, or who is the second largest economy? And I say it's the European Union. That's what I say. And that's who I think the second largest economy is. And I think the Commonwealth is the third. And then I think that actually they say India is starting to outpace China. So China might get pushed into the 5th position. So that's in my mind, when it comes to economics. But when it comes to political expression, a lot of the U.S. media thinks it's China. So, all right, traders, we're out of here. And we'll have WhatsApp running again by Thursday. So this is Doc from North America. And we'll say happy trails to you until we meet again. Happy trails to you. To all our trading friends. Later, traders. Have a safe and smart trading day. See you tomorrow.